Welcome back. Ed Ponsi here, your FX educator here on behalf of FX Street one more time. So we're gonna do two shows today. Yay! Woo! All right. Okay. Interesting stuff going on. When we last left you, we were looking at this head and shoulders on the DXY, the dollar index, and you know what that means, right? If there's a head and shoulders on the dollar index, then the euro almost certainly has an inverted head and shoulders, correct? And you can see it right here. So euro, which everyone said was going to go to parity, is going higher. And it's fascinating, isn't it? As we speak, this is the highest the euro has been, right, since December 8th. So it's the highest the euro's been in a month. Yeah, parity was hoping below, says Pan on Fire. Yeah, I guess it all depends on your perspective, right? I mean, Pan on Fire, I believe, is in the UK, right? So, hey, if the euro falls, maybe that European vacation, right? Maybe that trip to Greece gets really cheap. I don't know, man. I would love to see it go below parity. I would love say, man, this is your last chance, man. Go to Europe while it's still Europe, and get over there and see it. Before the European Union, who knows what's going to happen? Is the European Union going to collapse? I don't know. I guess it'll still be Europe if the European Union collapses. It didn't mean to imply otherwise. But, hey, this might be, who knows, what happened 5 years from now? Who knows, right? Who predicted this 5 years ago, that the UK would be trying to leave? And so who knows what happens next? What about a short above a new wall around Britain, says Pan on Fire. What about a short above 110? This is a fascinating thing because you see there's this huge wick that goes up and down. Of course, that's from the election. And to me, that ruins all the resistance up here is ruined. And so I don't know if I'd really be that keen on shorting it up there. Let me see if maybe on a shorter time frame I can find something that makes sense in that area, but I would be thinking really, my gut says go long. If you want to do anything, 110 is right under this mess here. You see this big where it shoots up and down? 110's actually under there, but I can't see a compelling reason. Let's just put it that way. You might be 100% correct, but I just don't see anything that would compel me to short it there. I would be thinking more in terms of going long, quite frankly. Although, if you're going to bet against the dollar, why, I like your idea of using Aussie better than Euro. Aussie's clearly stronger than the Euro, right? If we match them up against each other, Aussie has been just putting it to the Euro pretty much all month. There might be a better trade here, in terms of you're rallying up into resistance in a downtrend. I think that I like your Aussie USD setup. I like this setup also. Aussie just seems to be where the action is, right? If you look at Aussie, okay, and here's on the daily, right? Aussie has been crushing the euro. Aussie has been doing very well against the pound, with the exception of the past few days. We know that there's a lot going on with the pound. We probably want to stay away from it right now. The yen has been strong, but Aussie has been stronger. I mean, Aussie is rocking, man. Aussie. What about against New Zealand? This is the only one that might not work. Yeah, look, flat because they're both strong. Aussie and New Zealand are both strong. So really, if this is a boxing match, the one with the hardest punch right now seems to be Aussie and New Zealand, right? And the one that looks like it's about to become considerably weaker is the US dollar. I'll tell you one thing that really bugs me, though. So just to don't change the subject. The dollar looks like it's ready to turn. The dollar ran up with stocks here, especially right here. Right? This is your election right here, your big wick. Big rally in the dollar and big rally in the S&P 500. Except one shows every sign of topping and turning. That would be the dollar. And one does not. And that's this one. That's the stock market. Now, what's going on here? I gotta say, it could be that we're going to see a lot less regulation, and these companies think they're going to be a lot more profitable. We believe these companies are going to be paying less taxes, and that's good for the bottom line. It's money, right? So it's money in the company's coffers, right? You pay less taxes, you keep more. So you're seeing a real divergence here. But what currency pair tends to go down when the stock market goes down? This one. This has been looking kind of shaky and creaky lately, right? This is dollar yen. Dollar yen's been looking like it wants to crack, or maybe has already cracked. And this correlates pretty strongly to stocks. So you've got to wonder, there's some weird divergences happening right now, right? Dollar was strong, stock market was strong. Now the dollar's beginning to fall off, and you're seeing that inside this currency pair too. But when dollar yen moves down, it tends to be bad for stocks. When dollar yen moves up, it tends to be good for stocks. This move mirrors the move in the stock market pretty much up until here. And then somewhere in late December, it starts to go the other way. Now, there's no law that says dollar yen and the S&P 500 have to follow the same path. And correlations come and go. Correlations can become very strong. They can become very weak. Correlations, this is just from my personal opinion based on observation. Correlations are stronger when people are afraid. Right now, markets do not seem to have a lot of fear. Right? VIX.X, hold on. I'm trying to pull up the VIX. I can't seem to pull it up on here. But I don't think stocks are not showing a lot of fear. Right? And when I say stocks, I'm talking about the S&P 500. This is what stock traders in the U.S. use as their benchmark guide. And stock markets around the world do have a tendency to correlate with each other as well. Anyway, just wanted to say that the divergence between dollar yen and the S&P 500, it's strange to me. It feels weird. It feels weird to me that the dollar is moving one way, was moving in sync with stocks, now moving opposite stocks, and taking dollar yen down, which tends to happen when stocks go down. Okay, brave new world out there, I guess. let's get to some questions. Daily S&P range formation reminds me of the same pattern between July and August last year. You know, Sandy, you're right. And if you look back, we were in this long, except the only difference is we went sideways forever, right? Like it went like August, September, but it was really like half a year where we just drifted. And isn't it funny how everything was breaking down right before the election, and then they had the election and everything went the other way, and it's all counterintuitive, and nobody knows what it all means, right? But yeah, I agree. This, to me, reminds me of this. Main exception being, it simply hasn't lasted as long. Not yet, but I'm 100% agreement with you there, Sandy. Very reminiscent of the action last year. I'll tell you some strange things, though. I can tell you some strange things about the stocks in general. What about the weekly chart on the Dixie? Can we buy at the 98? And gold looks similar to Aussie. Let's take a look at that weekly Dixie. Whoops. Hold on a second. Make it weekly. You can see that big old. Now, if we were to use traditional measuring techniques, I think it's approximately 103 to 101 and a half. Right? That'd be 2.5 points. So you would take 103 at the top end to say 100.5 at the neckline. That's 2.5 points. Subtract another 2.5 points, and where are you? You're at 98. So, buy at the 98 area is the question. The answer is, according to the measuring technique, the answer is yes. In fact, that would be a target based on a measuring technique. Now, be careful with measuring techniques. I don't know how many of you read my latest book, but it's a book about technical analysis, but I actually take some things to task. I don't agree with everything that's out there. I'm going to show you one thing. I use measuring techniques sometimes. And Carlos, I think, got 98 from a measuring technique, although I don't know that, so I can't assume that. But here's what I'm saying. Measuring techniques, and I say this in the book, there are certain things in technical analysis that were used simply because that's all there was. I mean, we know that this is bearish. How bearish is it? Well, let's measure from the head to the neckline and then add that much on, and it comes out to around 98. I have no idea if that's why Carlos picked 98, but that's an answer you would come up with. But just remember, technical analysts just didn't have anything else to go on. When they started using measuring techniques, there were no personal computers. People didn't have charts, right? They knew this bearish thing had happened, this bearish shape. They knew that, it was bearish. But they didn't really have a lot of sophisticated stuff to try to draw conclusions. Now, personally, I'll throw that 98 out there, and then I'll look and see if there's support higher. Just remember, my point is that measuring techniques happened because they didn't have anything else. That doesn't mean they won't work, but it's not exactly scientific, right? And hey, scientific doesn't always work. Nothing always works, right? If anything always worked, this would be easy. But just keep in mind, right? I use measuring techniques, but I know deep down that if they work, it could be coincidental, or it could be self-fulfilling. Because we have other folks out there using them too. Right? So yeah, I really take task with things like measuring techniques, certain candlestick patterns that I just think don't work or don't make sense. Like the hangman, I think makes no sense at all. So it's the book. It's uh, it's the book that's going to get me drummed out of the Market Technicians Association. But these questions must be asked, and people shouldn't just accept everything blindly. They should say, does this really? How much sense does it really make? That's all I'm saying. That being said, it's a short, and it is a short to 98 based on that technique, and I really have nothing else to hang my hat on here. There's no big support level. Right? There's no big support level. So you really have nothing else to go on except that measuring technique. In my opinion, that makes it more likely to work. You know why? Because everybody's in the same boat. Everybody's looking at the same chart. Everyone's saying, all right, where's the really obvious support level? There isn't one. So we're all kind of stuck with measuring technique, which is very unscientific, but doesn't mean it won't work. And there you go. That's how you end up with 98. Let's talk about gold. Pan on Fire talking about gold being similar to Aussie. Aussie, we said, just a quick peek at Aussie. Decent looking chart. Big breakout at 75. 75 is now support. Let's look at gold, which is also trending higher. And interestingly, kind of starts trending higher around the same time as Aussie. Interesting, right? Very late last year, Aussie begins to make its move. Late last year, gold begins to make its move. Late last year is very similar. I'm thinking 13. I'm thinking it could go 13, but I don't know. I mean, we may have talked about a gold setup earlier where I was using GLD, but I was trading off of the futures chart. Why? Because GLD is a derivative of the futures, right? It's a derivative of gold. But I don't really want to feel like opening up a futures account and trading futures contract, but I have stock account. I can trade GLD. This down here, yeah, I might not have been around for that with you guys. I don't remember, but this down here, there was a great MACD crossover right at the bottom. Check this out. Yoink, right there. So MACD, far from perfect, right? Certainly not right here, but catches the bottom here on a MACD cross. And it had just been hammered so badly. Gold had taken such a beating, you know, in the wake of Trump's victory, gold just got smashed. And I think at some point it becomes a buy, right? And then you have the buy signal from the MACD as supporting support tool. Didn't really pull back to support per se, although you could make the argument that this is resistance right here. And that is, and once resistance breaks, it becomes support. So you could give me an argument for buying it based on support and on MACD simultaneously in late December, and it's done quite well. And it could still have legs. One of the things that I'm also watching, and I cannot seem to mentally separate these two anymore, is Bitcoin and gold. And it's unfortunate, but I cannot pull up a Bitcoin chart right now on TradeStation. But I think you're going to see that there's some similarities. And Bitcoin, I think, in some people's mind, is becoming a substitute for gold, interestingly enough. So speaking of interesting, right? You know, I used to short Tesla. You can't short Tesla anymore. You know why? Look at that. I covered my short at the 200-day moving average. Let me explain why. This is now a Trump stock. I'm going to show you something fascinating. You see right here where it's resistance on the 200. Once that 200 breaks, you got to get the heck out. I'm no longer short this stock, even though the fundamentals are hideous. It's probably going to go higher. I should probably buy it. You know why? Now, so here's the election, right? So the stock market rallies after the election, but what does Tesla do? Tesla lays there like a dead dog after the election. And it's pressing its low for the year by early December. A month after the election, this is pressing its low for the year. Then what happened? Elon Musk who is the CEO of Tesla and First Solar, became an advisor to President Trump. And you simply cannot fight City Hall, right? Musk is probably a genius. He founded Tesla. He founded First Solar. He founded SpaceX, which shoots rockets into outer space. It's not publicly traded. Anyone who can do all that is way smarter than me. But what turned this stock was that right here in early December, Musk was invited to a meeting. You look at the chart before then. The chart is just junk. It's a big descending triangle, right? And it's just bad news. And the fundamentals are hideous. The company keeps coming up short on the expectations, right? But none of it matters, because now the perception is that Musk has Trump's ear, and therefore he will be able to get favorable legislation enacted. Now, I think to myself, who else has Trump's ear that might cause movement in a stock? Ladies and gentlemen, I give you the eternally controversial HLF, Herbalife. Herbalife. I think Herbalife is a Trump stock. Right? The regulatory authorities are always hot on the heels of Herbalife. But Trump is very anti-regulation, as we know. Want to hear an even better reason why this is a Trump stock? You ever heard of Carl Icahn? Carl Icahn runs a huge hedge fund. Carl Icahn owns 22% of the outstanding shares of HLF. 22%. He is the biggest shareholder of HLF. And he is just accepted to be a special advisor to President Trump. What do you think? So the company had bad news on Friday. Look at that sucker. Gap down. I'll show you on the 5-minute. Gap down hard. Why? Coming up short on earnings. Investigation for their actions in China by the U.S. Just bad news. Stock should plummet, right? Stock drops like a stone and gets it all back by lunchtime. I'm telling you. I'm not telling you anything. But tell me, is that not something or other? By the way, Mr. Icon, who owns... Okay, so, right. So Sandy says no more betting on zero anymore. So on March 17th, okay, I've done my homework. Okay. On March 17th, Betting on Zero will be released. Betting on Zero is a documentary that basically says HLF is worth zero. Okay. So the stock will probably get hammered again when the documentary comes out. But it might be a buying opportunity. It just depends. I guess it just depends how much traction it gets. Personally, I've met people who think that the products that Herbalife creates are junk. And I've met other people who think that the products are amazing. A man told me recently that Herbalife products saved his life. And yet there's all this... I'll tell you what, Google John Oliver Herbalife when this is over. And you'll get a taste of what's to come with this Betting on Zero documentary. Google John Oliver Herbalife. Herbalife. The takedown is brutal. Brutal. And yet, I've also done my homework on Icon. Did you know? Not only does he own 22% of the share, he has the right to purchase up to 50% of the shares. So, and the thing about this Herbalife is that it's very much personal between Icon, who owns 22% of the shares, and Ackman, who is short, a huge short, and who created the documentary Betting on Zero. Folks, if nothing else, this is going to be tremendously entertaining. But it could also be an opportunity in there. Icon is Trump's old friend, and he is a special advisor to the president. I say advantage Herbalife. A young 80 years old. Boy, the guy gets passionate. You can Google Icon versus Ackman CNBC if you want to watch fireworks. It's very personal. You have two guys who are on opposite sides of the trade. One is massively short. The other is massively long. And it is very much each wants to see the other lose more than anything you can imagine. It's incredible. Okay, so anyway, that's just a little food for thought, just something to just whet your appetite there. So there you have it, Herbalife. Is it a Trump stock? I leave it to the market to answer that question. As for me, we pull up the euro, still looking very much like it wants to go higher. British pound, be super, super careful about the British pound. We'll look at COT tomorrow, maybe. I also wanted to look at that. We didn't get to it. But just remember, do not forget, 9:30, I believe it's 9:30. It's the time here says NA. I heard 9:30 GMT. GMT right? So it's going to be very early for you folks in the U.S., way before sunrise. EU membership court ruling, kind of a big deal, maybe the biggest deal certainly on your radar right now. And less than 24 hours from now, okay? So be super careful. All right, gang, I'm out of here. But I'll be back tomorrow. So come and join me. I love speaking to you, and I hope you enjoy it as much as I do. Thanks again for your participation. I'll see you tomorrow.